Welcome back. Krishna Institute of Medical Sciences posted a healthy set of Q3 earnings. The company indicated that business is getting back to pre-COVID levels, especially on the high-end elective surgery as well as on the patient side. Things are getting back to normal. That's the revenue picture, which has gone up by close to about 9% on a year-on-year basis. This is one of the recent listings, and the stock is down well since listing. It's up close to about, I think, 60% compared to its IPO levels. We're now joined by Bhaskara Rao, the MD at the company. Morning, sir, and thanks so much for joining in. First, if you could tell us the picture on margins. Is the margin expansion sustainable, and what will be the drivers for your margins from here on, both the headwinds and the tailwinds?
Good afternoon. This is actually the margins are sustainable. If you look into the last two decades since inception of this one, we are growing around CAGR of 20% in the history. Now, as we are looking, the more and more units are getting matured units. Whenever there is a matured units are there, they will definitely, whatever is the revenue that comes, adds on more on the EBITDA. Whereas there are certain recently acquired assets were there. They are also keep growing up. They are also reaching in next 1 or 2 years for the maturity. So there also the EBITDA margins are going up. So these, whatever is the growth that we have shown moving forward, I think we will definitely show the definite growth.
Okay. Mr. Rao, since you're saying there are a couple of assets which will become matured in say 2 to 3 years, do you think that margins can actually do better than 33% because more of them will come in the matured segment where margins are higher?
No, all the matured units may not be able to grow. The other unmatured units, that is around 23-24% now, that can also reach when the operational efficiency and the maturity is increasing, then they can also touch 30-33%, around 30% of the EBITDA margins. Like what we have done already, the matured units, what they are showing as on today. And that also the prematured units also will be able to showcase.
Okay.
So could you tell us what were the COVID-related revenues, the revenues that you got from vaccines in the December quarter? And now that it appears that we're moving from a pandemic to an endemic, what is your expectation of how COVID-linked revenues will move for the company from here on?
Actually, this quarter is very, very negligible of the revenue of COVID. In fact, in the last 2-3 weeks of December, because of the Omicron fear that a lot of the non-COVID work has come down. Otherwise, most of the diseases that we are treating on a OPD basis, coming and taking, and even the vaccination because of the government drive, not many people has come forward. So the COVID related is hardly anything, totally negligible.
Okay, that is good to know, sir.
This quarter, and moving forward, I think now one is the maximum number of people who have got vaccinated, and they are also taking the precautions.
Yeah.
And then the virus is becoming more and more, and then the potency might come down. So I don't think we can able to foresee any pandemic like wave 1 and wave 2. It will slowly disappear. At all, if it comes, it's like another flu or anything. What happened in the Omicron 3 this quarter, it will be like that only.
That is quite heartening to hear, sir, coming from you. So let's talk about the other part of the business then. I was just looking at your average revenue per bed. In last 3 quarters, it has come down from levels of 27,289 rupees in Q1 of FY22. In Q3, it's at 23,189. What is a sustainable number as far as average revenue per bed is concerned?
See, if you look into the history-wise, we are around 21, 22 thousands. Now has gone up to 23 in the last quarter of our average revenue per operating bed. I think 24 and 24.5 is the sustainable numbers. The reason is now in this pandemic and all, the payer mix keep changing because of the insurance cash is improving. Once the pandemic goes or endemic goes, then the payer mix keep changing, the corporates and the Aarogyasri is coming up. That's why I think the sustainable average revenue per bed will be around 23, 24, what we have been shown. It will be a positive side rather than negative side.
Sir, you've also planned to expand your presence in oncology and mother and child care. What are the plans to boost your revenues from these segments, and what is your expectation in terms of the opportunity and how much you will be able to garner?
See, basically, when we are looking into the oncology, most of the oncology has three divisions. One is the surgical oncology, the medical, and the radiation oncology. Whatever capex which we need to put in, it is only the bunker, that is the radiation oncology. The rest of all the medical and surgical oncology, we have already existing facilities. So with a little bit of capex, every unit, and there is a need for those areas where the oncology services are not up to the level. So that will definitely boost up the revenues as well as the bottom line.
Sir, last question before
and the mother and child, also where we have the capex as such is very, very less when you keep adding the other departments, like we don't need to add the diagnostics, radiology, like ultrasounds, the MRI, CT scan and all. It is a few number of beds. It is hardly cost around 10 to 15 lakhs per bed if you want to add when there is a space available. So that will also able to boost the revenues of the new therapies which we are going to add.
Okay. All right, Dr. Rao, thanks a lot for joining us and giving us all those details. So that's the word coming in from Krishna Medical Sciences. The stock is reacting to a good set of numbers. They expect to maintain margins at that 33% mark. With that, we'll slip into a short break now. We'll put focus on more stocks and also on the market. Stay tuned.